In this video I want to look at a very common short question again in higher level paper. It's the ledger question, where you're given a piece of information here, then you're asked to complete the following ledger accounts of a named account and then show, and you're given two accounts here, and then you're given a space, then we have to name this account and then describe the transaction, name this account, and then do the same down below. So the key thing to watch out for here is gives you the date and the information. And for me, this is the key point here. Bought goods or sold goods on credit, or as opposed to bought goods or simply sold goods for cash. And that is the main difference in the two types of question you're going to get asked here. It's either bought or sold goods on credit, or bought or sold goods. So this time we've bought the goods here, the goods have been bought on credit. So just to fill in the first one here, remember that T. Smith bought goods on credit from J. Foley for this amount. So the purchases account would be debited. The goods would have come in. So this is the receiving side of the purchases account. So it's purchases, because you did buy the goods on credit, but you name the person from whom the goods were bought. So it's J. Foley here. Some people put in creditor here, and then the amount is filled in. The second of the two accounts then is named J. Foley. And what happened was 8,120 euros worth of goods were purchased. So it's following the old rule that for every debit there must be a credit. So if you just notice the pattern here, it's purchases, J. Foley, purchases. This question came up in 2009, and again it's the key thing to note is credit, and this time it's sold goods on credit. So K. Allen sold goods on credit to K. Davern for €1,500, and there was no VAT. So the question then again is to name the account, describe the transaction, name the account, and describe again. Now you'll notice I filled in the second of the two accounts here first. I just think it makes a little bit more sense that way. The last question that I answered, if you remember, the purchases and then the receiving account, the debit side, and the entry went in up here. So if you think about it, then the same logic follows that for sales, goods would be going out. So that entry then would be the K. Davern entry, credit side, goods going out, the sales account. So therefore, this account then must be the K. Davern account and sales of 32,000. And again, it's worth noting the pattern: K. Davern, sales, K. Davern, and of course, this is the key point: goods sold on credit. This is the 2008 ledger question here. And just to make the point that 9th of June 2008, T. McGee, a supermarket owner, purchased goods for 32,000 by cheque. This is a cash transaction. This is not like the previous two where goods were bought or sold on credit. So the goods were purchased. So purchases account. The goods have come in, the debit side, the receiving account, and it was a cash transaction, so they were paid for. So that credit side entry must be the goods being paid for, so that makes that the bank account. And once again, pattern, purchases, bank, and purchases.